So we've established this, supply takes out, that is for the bullish, and we've established this. I'm repeating this because it's the fundamental concept that you have to get, because we are establishing one truth: the market moves between two zones, a demand zone and a supply zone. Okay, a demand zone and a supply zone. So now once that is keyed in, what are we now looking for? We are looking for our structure, and we learned yesterday when we're doing liquidity, and kindly give me a minute. Okay, let's just see. Give me a minute. Okay. So what will we be looking for in our on the market? All right. So first, we established this yesterday when we were studying liquidity. We studied the different kinds of liquidity, and we got to see how the market really plays out, what zones, where to take our setups from, and all that. So today we are learning technical analysis, what to look out for in the market. So this is our structure, right? What we are looking at. Say first, there will be a sweep of liquidity, break of structure, that's transactional liquidity, all right? Then structural liquidity before you come back in for the actual move we are looking for, all right? Where this zone is our POI. So today, that is what we are looking at. We are looking at POI. POI simply means point of interest. Okay, our point of interest, where our focus will be on our POI. So this is our POI. What's the rule? The rule is that first there will have to be, let's take this off from here. No. Yes. First there have to be a sweep of liquidity, which we had here, transactional liquidity, which we have here and here, then structural liquidity, which price came to take out, and that we said that is where our entries will be placed. So looking at this, we get to know that our area here, that area there is our point of interest. So POI this you get it. So that's our point of interest. If it's a bearish move, you have this. If it's a bearish move, you have, okay, let's do it here. If it's a bearish move, you are going to have first this. Okay, let's say it as we go. We will first have our sweep of liquidity, transactional liquidity, structural liquidity, then finally our main engine, our main move that we are looking at. And we said that this will be our POI. What are we seeing? We realize that this was a sweep of liquidity, transactional liquidity. This is for the bearish setup, right? Second one here, and then finally our structural liquidity will be used from here. Then our main move, which has happened as we said. All right, so perfect. this is perfect. So this has been established. This is our setup we are looking for. So we established that price moves between two zones, that is our supply zone and our demand zone. So to find this, let's break it down to steps. Okay, to find this, let's break it down to steps. First, we are looking for a basic market structure. That is what we are looking for. We are looking for a basic market structure. So let's draw our zone, right? Let's see, for the bullish side, we are looking for a basic market structure. That is to say, price creates this BOS, all right? So basic market structure is expecting that price will come back here, then we buy, which is not going to be so. So according to our setup, basic market structure take place. We have our number one, our BOS. Price comes back down and sweeps, all right, sweeps this zone, that demand zone. So it's a basic. We first of all look for the basic market structure that failed. Then it sweeps. So that's the sweep that happens. We see our transactional liquidity happen right here, number 2. Then we see price correct or reverse substructure, creates a structural liquidity here, number 3. Another transactional liquidity has been created here. That is not important for us now, but let's just have it in mind. Then finally, before this structural liquidity is taken out back into our POI, then we have our buy. Okay, then we have our buy. Then we have our buy from this zone. So we look at charts examples, but let's just finish. Then we have our buy here. So we are looking at it for let's look at it for the bearish side. All right, we are saying, let's first of all draw our zone, our supply zone here again. Then we are saying that what we are really looking for is that, let's say price is moving this way, then comes here. All right, let's get it right. Price is going bullish, then finally hits the supply zone, right? We will not see it on the charts, but from what we've seen, we know that it's a supply zone, a strong supply zone. After a break of structure has been created here, right? You see that price takes off this one. That is what basic market structure is taking place. But from our rule, we established that basic market structure doesn't always play out. This happens. There will be a break of structure, which according to basic market structure will say price has to come back to this zone, then you sell, which doesn't happen. So first there will be a break of market structure, that's BOS here. So market structure here, the basic market structure will be taking place, but it will fail. So there will be a sweep of that zone, price will come back now, and a transactional liquidity will take place just as it took place here. So this is our 1, this is our 2, transactional liquidity take place. Price comes back and creates a structural liquidity. So this is our 3, number 3. Wow, what a 3! So a structural liquidity. Then price finally comes back inside, takes out the induces that structural liquidity before there is a sell. Okay, before there is a sell. Before there is a sell. So our zone is right here. Then there is a sell. So this is what we are saying. This is what we are looking at. This is what we are saying. So what we are seeing, or what we are looking at here, is what we call our POI. Right? Our POI, our point of interest. Our point of interest. Let's highlight it. Let's give it. That's our point of interest. We'll give it. Point of interest should be green. Okay, point of interest green. Let's give it a color. Point of interest, point of interest. Okay, so how do we know this point of interest? All right, how to know exactly that point of interest we are talking about. So over here, so meaning we are going to focus on this side. What to look out for here? What to look out for here? The point of interest. What are we saying? We are saying that when price moves like this, the last, for the bullish side, all right, for the bullish side, when price is bullish. So when price is bullish, we realize that there will be a break of structure. Our rule states that the candle here, the last bearish candle here, that fails. Oftentimes it's an order block, all right? So the last candle here, that fails. What are we trying to say? It was actually supposed to hold, because this would have been another zone to buy from. Okay, it would have been a zone to buy from. However, it's failed. So the candle stick there, for a bullish pattern, right? The last bearish candle that failed, that becomes our POI, and when it happens like that, it is known as our QMR, right? That is QMR. Oh, note this down. That's our QMR. It's called the Quasimodo reversal. The Quasimodo reversal. The Quasimodo. We also have the Quasimodo continuation. So it's our QMR, right? QMR. It's called QMR or QMC. That is the point what we are going to use to mark our entry, all right? The QMR, the Quasimodo reversal or Quasimodo continuation. So what are we going to say? It's the last candle for the bullish. Let's define it, all right? Bullish QMR. How am I typing? Bullish QMR. The last bearish candle that's failed. We'll draw it here. Politely. That's the bullish QMR. Now this will be the bearish will be the last bullish candle. So for the bearish QMR will be the last bullish candle. That meaning what we are saying is for the bullish QMR you have this break of structure. Over here there will be a bearish candle here. There will be a bearish candle. So that bearish candle that failed to give us this, all right? So the one that got swept, our sweep of liquidity, that candle that will be here. Like let's do this. 1, and let's make this red, all right? Let's get this. Something like that. Let's just duplicate this here, rotate it this way. All right, great. Then change colors. This becomes red. This becomes green. Great. This is green. Yes, so what is our rule saying? When it is a bullish QMR, we are looking for the last bearish candle that failed. So we will mark this. That's the last bearish candle that failed. Why? What is going to happen here? Let me duplicate this one as soon as possible. Okay, no worries. So what is happening here is that we are saying this happened, a break of structure. This fails, right? And price goes back to create our transactional liquidity, comes back to create our structural liquidity, then comes back into this zone, this exact zone. All right, let's see from this side too. This is for the bearish QMR, the last bullish candle that failed. Most times it's an order block. All right, so what are we expecting? We are looking at, so price came here, we got a BOS right here. Instead of we getting this, now that was basic market structure. So we are starting from the basic market structure that failed. So the last bullish candle that failed to hold, all right, got swept. Price comes back, creates transactional liquidity, comes back, creates, after the correction, creates a structural liquidity. Then it will come back in there to this same zone before the sell. All right, before the sell. So that is what we mean by the QMR. So this is our QMR. This is our QMR. And it's right here. I hope you are understanding it. Like you'll be able to get what QMR is. It wouldn't be difficult. So now let's look at charts presentations of it. All right. Let's look at chart presentations of it. Where do I go from here? Okay, so let's see this one. You see, this is our chart on GBP USD. GBP USD. What did we say? We realized that, let's look at this one. This on a daily time frame though. You see, we have to, why is this necessary? It's necessary because we established that when you are trading, we get our setup, right? And we are waiting for this to buy. Without this QMR, you wouldn't know where to expect price to come into to be able to take your trade. You wouldn't, because when we did our measurements, all right, when we looked at it, we said we were going to use our fig tool. Let's say we get our swing structure, then we take our fig tool, we measure. Oh, let me do something. If you are here, you can do as I'm doing. All right, I already gave this template out, so you can you can set up your fig tool alongside me, all right, and you take this one off, leave this one, take every other one off, this off. This is our Fibonacci retracement tool, all right, you take it off. All right, so you will have this. So what we are saying is that when you get a break of structure, right, and you're measuring your swing structure, we know that this is what we are running, right, and we are expecting price to start selling from here into this zone before we buy, okay, because that's our equilibrium. This is our discount zone. This is our discount zone. Our discount zone. That's our discount zone. And this is our premium zone. Okay. Our premium zone. Okay, so we look at this. How am I supposed to get into this trade? Yes, I know that when price comes here, I will buy. So do I come and put my entry like this? All of this plays. Imagine this. We are on a daily time frame. How this is a 1-to-1 risk to reward ratio, and this is a whole stop loss of 128 pips. On a daily, it takes a whole day for price to create one candle. So imagine I am to buy from here, and I'm saying that this I'm using all of this. It is till next 2 months. Do you get it? And besides, when you are following traders, especially those who like signal groups, and say buy GBP USD now, then like you don't know the size of the person's account. Before price will do this, let me say you are trading a $50 or $100 account. Before price will come into this zone, you would have your capital would have already finished. You would have gone out of the trade, gone out of balance. But because the person, you may not even know the account balance of that person, so the person will after price gets to this point and comes back up into profit, the person will still have the capacity or the capital to still be in that trade. It will come out of drawdown and still be in the trade, but your small capital would have disappeared like flash, within a twinkle of an eye. So our QMR now helps us following our rules. We know that, okay, if we went to the lower time frame and were to be taking trades on our substructures, this is where all trades within the substructures will end around here. This is our equilibrium. All right, and what we'll be looking out for now is to know exactly where we are expecting to take our buy from. So we bring this one here to the break of structure. Then we get to know that, okay, this area is our area of interest, meaning we are waiting for price to come into this area. However, this is a bullish strategy. So the last bearish candle that failed, got swept. For our precise place of entry, our precise entry, we put our POI, we put our candle, our POI zone there, we mark it, right? Then you realize that now instead of 428 pips, you come down, you can have 221. We don't actually trade on the daily, right? We use daily for direction, but just for demonstration purposes. So you even cut down half of the cost. Then now you can wait for structural liquidity to take place. Then you finally come to buy, wait for price to come for you to buy in your discount zone precisely and comfortably. I hope I am making sense. I hope you are getting me. Let's look at the chart example on GBP USD. So on GBP USD, what do we realize? You see a sweep of liquidity here, basic market structure that has failed us. All right, basic market structure that has failed. Then what do we realize? Break of structure, transaction liquidity takes place here. Another one takes place here. Okay. So we already have this. Okay. Now, what do we realize? We see that this is the last bearish candle here. Where is the last bearish candle? This red one here. Let me zoom in. It's because this is a bullish setup we are looking at. All right. So this last bearish candle here, this one, is what we have located for our QMR. Again, this is our bullish time frame. We don't trade here. We use this for speculation, knowing market direction. But for demonstrating purposes, that's what I'm using. So now we mark it, right? We mark it. Oh, we have our structural liquidity to here. Right, our structure. So there are, for our setup, there are types. There is type 1, type 2. We will learn all in the advanced class, right? So there is this. There is this. This is the default one that we have all been working with throughout. Then we buy, right? Where we have, let's start with our sweep of liquidity. Where we have a sweep of liquidity, we have our structural liquidity, then we have our zone here. There is another, so this is our type 1, right? Then there is type 2, which is like this, sweep of liquidity. Then we have this, our structural liquidity has been created for us. This is a type 2, before price comes back down here to buy. Alright, we'll talk more about it. So what we are seeing is that we had a transactional liquidity take place here. Our breakout structure, that's where it was. Anyways, that's not what we are dealing with now. So we have a transactional liquidity created here. So we are looking at where price, the precise places price will come and react from. What did we notice? So suddenly we noticed that, boom, did you see that? Have you seen this? That is the exact zone where price came to tap before the bullish entry. So let's look at, if I take this trade, I don't trade on the, we don't trade on the daily and weekly time frame, right? That's a lot. We use it for analysis and speculations. So now I get to know that yes, I didn't sell in this minor, in this substructure, right? I didn't sell all the way down here, but finally I have gotten to this zone. I have marked my POI. So now all it takes for me is to go to the 4-hour time frame. I've left the daily time frame now. I've come to the 4-hour time frame and locate the same setup. The same setup. If I look here on the day, sorry, on the 4-hour time frame, I can see this. I can see this. One. This. Then this. Alright? But before the actual buy takes place. Before this actual buy takes place. Meaning we have, whenever you see a situation where the QMR, right, is exactly where the structural liquidity is. So some will call it head and shoulder on a lower time frame. Whenever you see this zone has already been tested, you look for an order block above or below it. So this is in case it's a bullish structure, right? If it's a bearish structure, you look and they are both at the same level. That is our QMR and our structural liquidity. If they are both at the same level, you look for another block above it. So that is where you will mark. Okay, this is where you mark for your entry. This will be your structural liquidity. Over here, this is where you mark for your entry. Not this, because it has already been tested by your structural liquidity, right? So you look for another block and below this for a bullish structure, you look for another block above this. So basically on the 4-hour time frame, that is what we had here. So types of entries, we will learn that too. Okay, we will learn that too. So on our 4-hour time frame, that is what we had here. So we realize that our QMR and our structural liquidity are all in the same zone. All right. If all things being equal, we would have marked this, but it has already been tested out. So what we look out for is an order block here. When you go to the lower time frame, you realize that there's an order block here. And in fact, so let's look at the order block. So this is our order block. We our entry from this one. as the rule says, if your QMR and your structural liquidity are on the same line, you look for an order block below or above the zone, all right, the setup. So now you take it. Let's see what happens. We want precise entries. Boom. Did you just see this? So if I'm to enter this trade, I'll just get my 2, I get here, and I put my stop loss right above this one. For a neat 40 pips, I scale up, let me say my 200 pips, and voila. If you enter this trade for, I think this trade, if you enter this trade, it's on a 4-hour time frame. It can take a while to. These are for those who are looking for profit. But there are types of traders. There are scalpers, there are swing traders, there are position traders, there are day traders, right? I'm a day trader, intraday trader. So it's not a problem for me. But there are those who don't have that patience. They get into the markets, quick out, then they are done for the day. But I hope that you are understanding. So if you are looking at this, yes, our QMR was at the same level as our structural liquidity. So our entry was at the other block beneath it. We had a transactional liquidity here, and we got into our trade here. Boom, we are up for a buy here. We got our 200 pips. Beautiful. But one of the beautiful thing about it, if let's say you are a swing trader, right? Remember where this trade started from. We got our order block that's filled, our sweep of liquidity here. Price gave us structure, this type 2 structural liquidity went way up. All right, then it came back down to buy from here. Our POI came back down here to buy from here. So if you are going to stay in this trade till it gets to this point, you have the grace for that. Good morning to you. You could have been in this trade up to this point. That's over 600 plus pips. That is, if you have the stomach for that, you can get it, because the origin of the price action started from here, and based on our rules, the rules of the setup, this is our area of this whole swing structure here. From here to here is our area of interest. All right, that's on the higher time frame. But we went to the lower time frame, got our 200 pips, and called it 2 days or a day. I hope you're understanding what I'm saying. Validating our setup. So we are validating our setup, right? What are we looking for? We are looking for first basic market structure, or let's call it a BMS, a basic market structure that's failed. All right, what else are we looking for? We are doing our buy check. Basic market structure that failed. Sorry. We are looking for, so the basic market structure that failed. Okay, let's label it like this. Looking for a sweep of liquidity. We are looking for a break of structure. We are looking for structural liquidity. Then finally, POI, our point of interest. So what are we saying? To validate our structure, meaning we have to make sure that our setup is golden, not to just jump at any setup. We first of all have to look for a break of structure, right? Number one, check. Sorry, a break of structure. That's let me delete this one. We are looking for a BMS that failed. That's a basic market structure that failed. What do we mean? We are looking for this break of structure, basic market structure rule stating that this is supposed to hold, which it won't. So basic market structure, instead of doing this, we are looking for the one that fails, meaning a sweep of liquidity, right? then a break of structure here, or should I call it our transactional liquidity. What else we'll be looking for? We'll be looking for structural liquidity, meaning there will be a correction or a reversal, then structural liquidity will be given us. Then finally our POI, which we got after we got our zone that failed. All right, we got our POI from here. Let me do this one. This is our POI after we got our market. So price will come back down to buy. Let's look at it from a sell position. We first of all look out for basic market structure that failed, meaning we are looking at break of structure. So this is too big. Let's make it smaller. We are looking for a break of structure, expecting price. This is our break of structure, right? Swing setup to come and buy and sell from here, but it won't. So we are looking for price to come back here, sweep, then break. That is a transactional liquidity, a BOS. So we have experienced our sweep here. We have a sweep here, a break of structure here, comes correct back, get our structural liquidity here, then boom, we have a sell from there. We have a sell from there. This is our POI. So let me take this side again so that we can just follow our rules. Okay, let's not assume anything. So we're first looking for a BMS that failed, a basic market structure that failed. Okay, we have a break of structure from a supply zone. It gets taken out. That's a sweep of liquidity here. So our BMS that failed, check. Then we get a break of structure here, check. That's our transactional liquidity. A reversal or a correction to give us our structural liquidity, check. Right here, structural liquidity, check. Then finally we draw our POI, which is this is a bearish structure. This is the last bullish candle that failed and as a result was swept. All right, so we get it, we mark our POI marked there. Great. What we are expecting, price will come back, take out the structural liquidity, then sell. All right, just in case our setup is like this, we realize that both our structural liquidity and our QMR are the same level. They are out here. They are the same level. What do? We look for an order block that's up here. We mark it for our entry. We have already gotten our BMS that failed here. Alright, we have already gotten our BMS that failed here. We got it here. It failed. There was a sweep of this liquidity. We got our structural liquidity, our transactional liquidity is taken, our structural liquidity has been drawn for us. Then, because both the QMR and the structural liquidity are all in the same zone, we look for an order block at the top. Then, boom, we sell from there. Vice versa. Okay, let me see if I can get this. This is a bullish, it's the same thing. In case they are both at the same level, right? Our QMR and structural liquidity are at the same level. We look for an order block here above, sorry, this is below it. Alright, that is where we take our entry from. Why are we taking our entry from there? Because our order block and our structural liquidity are at the same place, so at the same zone, so we don't take our trade from there, it will get induced. All right, so what are we looking at? Basic market structure that failed, meaning what? We would have expected a price to do this and buy from here, but it didn't. Rather, it swept, came back up, created a structural liquidity for us. We got a transactional liquidity. Structural liquidity has been created for us here. Price comes back, we buy from here. Okay, great. Great.